OpenAI is set to go public at more than $1 trillion valuation. Sam Altman wants you to believe he is building the future, but skeptics believe insiders are trying to pass their own risk onto the public. So before you go buying into the hype, let's find out what this IPO is really all about.
OpenAI and AMD announcing a 5-year AI data center deal.
OpenAI has signed a $300 billion deal with Oracle for cloud computing power.
NVIDIA saying it's going to invest $100 billion in OpenAI. It's sparking a global tech rally.
I am not saying OpenAI is fake, AI is useless, or ChatGPT is not important. OpenAI has already proven that people want AI. ChatGPT proved that. People use it. Developers use it. Companies are building around it. OpenAI is the case study here, but the lesson is bigger. For any company built around large language models, demand is not the question anymore. The question is whether the company can afford to serve up the demand of their customers. This is where AI breaks from the old software model. Traditional software usually works more like retrieval. A company stores information, pulls it back from a database, and once it has the customer, one more user can become relatively cheap to serve. AI does not work that way. The product is generation-based. Every prompt forces the model to compute a new answer, so more usage does not automatically turn into cheaper revenue. More usage means more model runs, more capacity, and a delivery cost that keeps climbing every time your clients use the product. This is why OpenAI is a two-front race. It has to build enough infrastructure to serve demand, and it has to make each answer cheap enough to deliver over and over again. This is the core problem that OpenAI as a company is facing as it goes public. To understand IPO risks, look at the cash burn underneath OpenAI's growth. One AI cost analyst estimated that OpenAI lost $1.22 for every dollar of revenue in the first quarter of 2026. It projected a $14 billion loss for the full year and said cumulatively the losses through 2029 could reach $115 billion before expected profitability. Those numbers are not the whole story. They are evidence of the bigger point. OpenAI is not losing money because nobody wants their product. It is losing money while serving massive demand. Some people defend this by comparing OpenAI to Amazon losing money in the early 2000s when it was scaling by reinvesting profits. But that comparison has a problem. Amazon was building warehouses, logistics, and market share. Once that machine matured, scale could make the business more efficient with Amazon. But a language model business has a harder problem because the product keeps getting more expensive each time your client uses it. So if you're thinking about investing in OpenAI, the question is not whether OpenAI is going to become profitable. The better question is whether it can keep paying for the next build out long enough for efficiency gains to finally catch up. Because if AI demand keeps growing, the bill does not stop. The next wave of usage only increase the electricity demand to meet it. Now, to be fair, OpenAI does have a serious defense, and the cleanest version came from OpenAI's CFO, Sarah Friar, when she went on to the All In podcast. Sarah framed the IPO as a funding tool, not the finish line.
I saw an article today, I think it might have been in the Wall Street Journal, that the perception is that there's an advantage to IPOing earlier if you're an AI company. So now we know SpaceX is going, and then the question is when are OpenAI and Anthropic gonna go? And I'm curious, how do you think about that? Do you think there is a little bit of a race on, or you haven't made a decision about that yet?
Like in the end, an IPO, I say this to the team all the time, it's a milestone. It is not a destination. Do not run your company as if that's some sort of destination. It's just another way to fundraise.
Now that comment matters because OpenAI's CFO is telling you this is not a victory lap. It is a way to raise more capital. She also said OpenAI raised about $122 billion to give itself flexibility. Capital is central. But the company is not asking investors to believe in one narrow AI product. In this same all-in interview, Fryer described the bigger strategy. She said, OpenAI is building, I quote, the AI layer with one foundation and many interfaces. In plain English, OpenAI wants to sit underneath ChatGPT, Codex, enterprise products, APIs, agents, memory, personalization, and maybe even ads later. It is not presenting itself like Anthropic with a clear enterprise reg around coding. OpenAI is asking investors to believe in something bigger and grander, that it can become the default intelligent layer everyone plugs into. This is why the valuation can get so high and why the risk gets bigger if you invest into this IPO. If you want to buy at that valuation, you are buying the belief that this company can keep improving and keep businesses, developers, consumers, agents, and platforms coming back from years on end. So investors are not just betting that people like ChatGPT. They are betting that Sam Altman and his team can secure capacity, keep enterprise trust, and lower costs while demand keeps rising. The company's own CFO explained this problem. In the same all-in interview, Sarah Fryer said more than 9 million people uses ChatGPT weekly. She said Codex hit 5 million users after starting near zero early in the year. And she said revenue is becoming roughly balanced between consumer and enterprise usage. Those numbers raise the next question. Every ChatGPT user, enterprise deal, coding workflow, and background agents create more demand, and the company has to serve that demand when you use the product. Fryer also explained the compute constraints in that interview. She said, quote, compute is scarce, described demand as going up a vertical wall, and said there's not enough tokens available. That is the issue. This problem is not a lack of demand. Demand turns into compute load, and compute load turns into infrastructure pressure. This is true for OpenAI and for any company built around a large language model. So the company has to win both races at once. It has to build more capacity. It has to make each unit of intelligence cheaper. If it wins both sides of that challenge, the business can become huge. If it loses each side of that challenge, the business may not succeed. If OpenAI wants this valuation to make sense, it needs customers who use AI heavily enough to justify the compute bill. That is why coding matters. If AI makes developers faster, companies can measure whether they ship more, fix bugs faster, build internal tools faster, or reduce bottlenecks. OpenAI has Codex, and Codex is serious. The argument is not that the company has nothing. The argument is that enterprise buyers will not choose only by brand. They will choose the product that gives their team measurable value. Right now, Anthropic has a strong story around Claude Code. And Anthropic is easier to understand because it has a clearer wedge. OpenAI is harder to value because it's making a bigger claim to the market. It's saying it's going to dominate the entire intelligent layer. Now, as far as Google and Microsoft, they make it even harder for OpenAI to succeed because they already control where work happens. Google has Workspace and Android. Microsoft has Office, Teams, Azure, GitHub, and Copilot. So OpenAI needs more than a model. It needs distribution, trust, pricing, consumers to justify having enough capacity. The next phase of AI adoption is not just excitement. It is accounting. Companies are starting to ask what AI costs when employees use it all day. One report gave a good example from Uber. Uber rolled an AI coding tool out to about 5,000 engineers. A 2-hour demo reportedly cost $1,200 in tokens. Uber later capped each engineer around $1,500 per month, and roughly 10% of its code was generated with AI. This is not anti-AI movement. It is a budget control story. Reports also said that Walmart built an internal AI coding agent, ran the numbers, and scaled it back. Also, both GitHub and Copilot are starting to move toward a token billing methodology. Some customers reportedly saw costs rise 100 times. Gartner forecasts AI software spending near $27 billion in 2026, up 139%. First came use AI everywhere. Then came the question, what did it cost? What did it save? And which teams just created a bigger software bill? This same question is going to be brought up to any language model company trying to get scale. If the customers are watching the meter, the company has to prove the value is worth the cost. Going public gives OpenAI more capital, credibility, liquidity, and the ability to build. That matters if it is selling AI tools and APIs to banks, governments, developers, Fortune 500 companies. But an IPO does not create data centers, lower electricity costs, solve chip supply, or prove margins. It gives the company more tools to keep running the same race, build capacity fast enough, make intelligence cheaper to deliver, win enterprise trust, and prove profitability can still become realistic. My position is this. OpenAI going public is understandable. It probably needs public market money because this build out does not stop. More demand creates more usage creates more infrastructure needs, and the bill repeats. But the IPO could be overpriced if investors treat demand as proof. Demand is not proof. Usage is not profit. OpenAI still has to prove it can win the real race. Can it build capacity, make each answer cheaper, win enterprise workflows, and execute a winning take most strategy? So when Wall Street sells the OpenAI IPO as the future, ask a different question. What is the public really buying? A company that already solved economics or a company still trying to solve it? The reality is AI is useful. OpenAI has demand. This is not the debate. The question is whether OpenAI can afford the future it's currently selling. OpenAI is the case study, but every major model company has to answer this question as well. Can it make intelligence cheap enough to serve at scale? If not, public investors may pay the next bill in a race that keeps getting more expensive by the year.
OpenAI has signed a $300 billion deal with Oracle for cloud computing power.
NVIDIA saying it's going to invest $100 billion in OpenAI. It's sparking a global tech rally.
Meta is paying nearly $15 billion for a scale AI stake.
We've created a brand new industry called AI infrastructure.
Many predict that the AI boom will dramatically change how people live and work. At the center